Dale from Loan Cabin. Attention real estate investors. I've talked to many of you before in previous videos. I want to talk specifically about the fix and flip programs that are rolling out into the residential market. So if you're a real estate investor, like I've mentioned in the past, and you've qualified for our investor cash flow loans without any tax returns to having to submit, I've got more to speak about on this subject. So if you're looking at a property, for example, and it's $100,000, you can put 10% down and you want to put $40,000 worth of improvements into it. They'll finance 90-90. What we mean by that is 10% down the acquisition and 90% of the rehab budget. Total financing not to exceed 75% of the ARV. What's the ARV? It's the after repair value of the property. So that's number one. The documentation required to get approved for this process is very light and limited. No tax returns, no 4506T, which means the lender does not verify what you filed tax return wise, and no sourcing of large deposits in your bank statements. In a lot of cases, in most loans, you have to source a large deposit. In this particular case, you don't. So it's very simple. 2 months 2 months bank statements, and no gifts for the down payment on this. We will finance 1 to 4 units, warrantable, non-warrantable condos, and townhomes. Property must be vacant. Loan amounts, this is really nice. The loan amounts are on the low end, $125,000 up to $2 million. FICO scores are very generous. If you're a seasoned real estate investor, 600. Seasoned means you did 1 or 2 properties before. So 600 FICO score. If you're brand new to this, we can do it, but they're going to require a 640 FICO score. In addition, if you are able to do one of these, they typically want, it's a 12-month interest only, assuming the state that you're doing the loan in allows interest only. For example, in Illinois, you cannot do an interest only. And speaking of the interest, we will allow you to finance within the loan 6 months of interest. So if you, in Illinois, for example, you would just have to make the principal payment. So you have 6 months to complete the project, and there would be 3 draw periods after it's done. So, and then at that point, if you don't want to flip the property, you actually want to hold on to it because you like the cash flow it can produce, you can roll into one of our investor cash flow loans. And as a reminder, what they do there, they will look at the average market rents on each unit in that property, whether it's 1 unit or 4 units, and as long as it's covering the PITIA, principal, interest, taxes, insurance, association dues, at least as long as you're breaking even on that, it's a scenario that they would do. So it's easy to transition out of the fix and flip into the investor cash flow, or there's other names for it, but I think you understand what I'm talking about. So it's a great program. If you have any questions, feel free to call me, 630-479-2719, and please like me on Facebook. Thank you.